Hi, this is the PP that in this video, I'm going to be talking about the economics of crypto and DeFi investing. Before I proceed, I want to make a disclaimer that the thoughts expressed here are my personal opinions and do not constitute as financial advice to buy or sell any financial instruments. Some of which is based on fact, but a lot of it is my own conjectures, which will hopefully help you to make better sense of what you come across in crypto investing or trading opportunities. And by the way, if you like my content, please give me some support by smashing a like button and hitting subscribe. Okay, in this video, you're going to learn how to use the economics principle to make yield farming entry and exit decisions. I'm also going to show you how do cryptocurrencies or any tradable commodities gain their price. You're going to learn what drives the increases or decreases in the crypto price action. You're also going to learn the impacts of greed and fear in Bitcoin and other cryptocurrencies. And finally, I'm also going to be discussing whether it is stupid to have diamond hands or to HODL, which basically means hold. Okay. The first topic I want to discuss is economics applied to DeFi yield farming. So you've seen me review several projects up to this point on my YouTube channel. But I want you to remember this essential thing, which is be loyal to the profit and not the project. Of course, some projects can be really good. Some projects have a very good roadmap. But at the same time, because remember why you go into the project. If it is to support the project, then by all means stay. But if your goal is profit, then remember that, because this will help you from making unnecessary loss. This is a diagram, and those of you who have studied economics in school, you may have come across a diagram just like this. The most important thing I want to share with you is that if you are taking part in a DeFi yield farming project, and by the way, there are many DeFi yield farming projects that are constantly being launched on the Binance Smart Chain and Uniswap. In my future videos, I'm also going to be teaching you how to screen them through the RugDoc calendar and the RugDoc audits, what to look out for. But in the meantime, for projects that are good, okay, the initial phase will always give you the most return. So what this really means is that, okay, you input little, but you get a lot. Over here, it's like you input a lot, but your gains diminish. And sometimes when I say diminish, even if you're profiting on a daily basis, even if you are getting more token on a daily basis, but if the value of the token is going down, what is the point of having more token? So I think many of you who have done yield farming for even a couple of weeks, you probably have lived to understand this point, that in the beginning, yes, this is where the high APRs are at. But when it gets onto this phase, the APR typically drops by half or even 2/3. And it's still not bad. So in the beginning of a project, you can expect high APR. Well, maybe I went a little bit overkill. I should have said something like 10,000 to 40,000%. And but we typically notice in the first stage, if I go back to here, you see the price is rapidly appreciating. Okay, now the earning per day, well, like I said earlier, sometimes can go to 150%, but some of the recent ones that I did, let's say IBG, it was actually 26% per day. It's pretty good, pretty awesome. And for the first week or so, price continued to rise, highly profitable. And then it comes to the middle phase. Okay, the middle phase, the APR drops. Sometimes in the middle phase, like some of the projects, depending on the emissions rate, depending on popularity, the APR can still even be up to like 3,000 odd percent. The price will be stable or slightly declining. And basically, if you continue to watch this video, I'm going to explain what decides the price and how to use several cues to determine whether you should be staying in the project or finding somewhere else to invest in or to diversify. Okay. So middle phase, the earning rate comes down to 5 to 14% per day, which is still not bad. And like the whole time span of this happening, well, you will come across projects that the farm ends within 3 months. Why? Because the circulation already been hit. Emission is so high that circulation already been hit very early. Okay, but anyway, middle phase overall still profitable. Okay, so this is still profitable, and this is not a bad place to be. Now, the third phase. Okay, there are cases where it doesn't have a bell curve. There are some cases where this one goes off to like this. Okay, and in those cases, typically will be the ones where a lot of use case in the token, the market cap is big, so you still can hold. I mean, by that time, the APR going to be a lot less, maybe like 100% to 1000%. But let's say between 100 to 200 something percent, what we see very often. And if it's still like going this or going up, well, it's still not bad. Okay, the good and bad thing about some of these new networks out there is that it makes it so easy for people to launch a token. I mean, developers, they come in with an idea just to come in, get a bunch of investment, and they just do a soft route or a hard route pull, and case closed. If you encounter some of those projects, in fact, many of them, they kind of like go as quickly as they came. So let's go on to some examples. Like this is a project called Skunk. I did not actually take part in this project, but it is actually a screenshot that I found on Google Images. And I can typically tell you from experience that this would probably be an APR that you see if you're one of the first few to join a farm before the minting really starts, like on day 1 or day 2. But sometimes even between day 1 and day 2, the sheer amount of tokens being released and the people coming in not fast enough, it causes the price to decline really fast. The APR would drop very fast because there is actually an equation for it. I'll discuss that in another video. This is BuySwap. Okay, BuySwap, like many other products, they've come off the high of their price a fair bit, but it's still a very strong project. BuySwap is in the tens of millions, so it's going very strong. And you see, even no doubt, okay, the price has been falling, but the APR is still good. A personal recommendation is to use like a diversified investment approach. Watch my video about the 50, 25, 25 approach. So let's say if you're quickly gaining money, like I would allocate typically like out of 25% to go into like higher or moderate risk, high gain, very short term. Sometimes I'll split that 25% of my portfolio into several projects to diversify as well. But once I make the gain, I immediately put it back into the stable coin. I will also explain to you why stable coins are stable, such as this. I mean, the return ain't so great, but you do know for a fact that it's gonna be there. It's not gonna escape you. All right. Now it brings us to the very convenient topic: how cryptocurrencies get their price. In order to understand price, we need to understand the supply and demand equilibrium. Have you ever wondered why, like sometimes when you look at the price of a certain coin, and there could have been periods where it went very high or very low before that, but there will be a period of time where it's like, a lull period where it stays totally flat. Even when that coin is having daily emission or daily mint or new tokens being mined on a daily basis, means that more coins are being added to the circulation on a daily basis. It means that the rate of taking up those tokens is so constant that it helps the price remain the same. Of course, there will be some coins out there that have a fixed circulation. It does not go up or down. It's just one fixed number. And if it's a one fixed number and no one ever sells and no more people buy, the price remains the same. But most tokens have an emission. This is based on how many per block. It could be 0 point something per block. It could be 10 per block. It could be 30 per block. Something like that. Whatever. Now, these are two different projects that I have reviewed in my channel before. So on the left is Whalefarm, which is a scam rug pull project. Now look at the high number of circulating supply, and it is no wonder that the value of a token is in minuscule amounts. Now you can simply take market cap divided by circulating supply. In fact, no, it's not even that. It's more like market cap also has to do with number of transactions as well. So it could be a much lesser sum it could be a much lesser sum of invested capital divided by this, which is going to be a ridiculously small amount. Now, on the other hand, this is a project PRV. This PRV project, they have, this amount of total token. We take the total minute minus the total burn, and then this is the circulating supply. And if we take the market cap divided by this amount of token, it's no wonder that each token, is worth a couple of dollars, okay, versus this meaning like, less than even a tenth of a cent. If the circulation is small, the height, when people come in to buy, the price impact will be very great, and this is a perfect example of that. So what drives increases or decreases in price? Let's talk about the factors that increase demand. There's a greater popularity. The number of people looking to buy increases due to inflation. On an annual basis, people are increasing their financial ability to earn, and they, in other words, have spare cash to invest. Okay? And then when the price of something goes up, can you remember when Bitcoin will start to go bullish, and then all the other top 10, top 20, top 50 coins follow in after? It's always Bitcoin leading the pack. And then the altcoins, for example, Cardano, Ethereum, Binance, these ones, the price will, follow in closely. Solana, all right, these ones are following closely and increase in price. And, the future prospect encourages buying. On the other hand, the factors that decrease demand, there is less popularity. For example, maybe there's a new chain. Maybe there is a new coin. There's a coin that has faster transaction speed, less transaction cost, higher anonymity. And then people will shift from one coin to a different coin. The population that is going to buy will drop. And maybe also there's an economic problem like COVID-19. Remember how that caused a crash in the markets? Sometimes there are also very worthy substitutes. If there's another coin that has more to offer, well, it makes sense for people want to change to that. And of course, the price of the complement will rise. Finally, if there are all these things happening in place, overall demand goes down and the future expectation discourages buying, and there's a fall in price. This is from CoinMarketCap, and what I meant to show here is that, how the leader, okay, Bitcoin is like the leading coin, like the safe haven. I mean, it's more than twice of Ethereum, which is the closest competitor. And Ethereum is, a couple of times of Cardano. And it's interesting to see, when one goes down, everyone else go down after it. Everyone else go down after it. And the reason for that is because it was the launch date of the El Salvador Bitcoin common tender. And there was a glitch in their Bitcoin network. And it resulted in a lot of FUD in the news industry. And because of that, everything else went down, went into like panic sell mode. This is a graph that you can see the dominance of the different cryptocurrency. And it shows how Bitcoin used to dominate so much. But over time, it has a lesser dominance. At this current moment, you can see that, it's highly diversified. It's no longer, a monopoly of Bitcoin, but it's being diversified out to, a couple other major ones. But notice that after any depression, right after that, Bitcoin will initially lead, but soon after it leads, other things come up as well. And, the altcoin percentage starts to go up. Now we're going to talk about the impacts of greed and fear in investing. Okay, so what's interesting, by the way, this is a link where you can find it out. Look in the video description down below, and if you love my content so far, please smash the like button and leave me a nice comment if you like it, and share my video if you found it useful as well. Now, this is a greed and fear index of the crypto market, and what is interesting is that if we plotted this against a graph, okay, this is what it's going to look like. At points where it's high, you would look at it, compare it with the price chart, and then you will see that, it's kind of interesting how the highs and lows actually match up. And what this means to say is that the market is psychologically driven. This is just some example, and you can check that out on the link and see how, think about now, think about yesterday, think about last week, think about last month, and see how that matches up. And then you realize that any commodity is very, very sentiment driven. We come to a last topic here, which is about what is diamond hands? Is it good to be diamond hands? Should we HODL? It shows you the different kinds of slang that people would mention. And what kind of a HODLer are you? So a lot of people like to talk about the paper hands and the diamond hands. So diamond hands like, I'm not selling no matter what. Paper hand is like, sell at any kind of weakness. And then glass hands, cracks under pressure. Plastic hands, they support the trend, but they only hold Bitcoin. Wooden hands, they start solid, but it rots when it drops. So, this is an interesting graphic that I came across, and you may just want to, have a reflection about it, like which is you. Is it worth to hold a token? When is a coin a shitcoin, and when does it have good prospect? Well, it depends. If you're a giant in a small town, in a very limited community, where, say, 2,000 is big money in a market cap of, say, 50,000, even if you just pulled out or if you invested money, it could cause a bull run or a sell-off. And when you are just simply doing your harvest on a daily basis, some people may get scared. I've seen this happen in many new projects. It's funny. When whales come in and they put all their stable coin in to farms, even though they're just selling off in what is small amounts of them. But when people see it, they think, oh no, it's over, the bull run's over, we gotta sell, we gotta get out. Sound familiar? But on the other hand, if you're just a small fish in a huge ocean, it makes sense to hold on. And the reason for that is simple. Because collectively, you can save it. And collectively, many people are doing the same thing too. And like it or not, even if you don't want to HODL, many other people are going to HODL instead. I show you this is a shitty project. Like, this was one of the products that I previously invested in, RobinhoodSwap. It was good for a while, but just so much bad mismanagement. And it's sad because, the high was like $12 and now it's, a bit more than 100th of the high, and it's a joke, okay? For this project, let's say, the market cap is so small, and if someone were to just withdraw 5K, it's gonna make a big stir. And if someone put in, let's say 5K or 10K, it's gonna cause a huge green candle. And that's a bad thing, because if you cause a huge green candle, you're just gonna be like the mini whale that's gonna get skinned alive, all right? And on the other hand, but this project, the reason why it's flat, there is just enough people to match the circulation. They probably lost too much to even want to sell. They've probably forgotten about it. If you go to the Telegram group, one of the ways to find out whether you're like a giant in a small town or if you're a small fish in a big ocean, is to check out the Telegram group. I saw the Telegram group of this, and it's a fucking joke, because every day there might be one or two new people come in, and everyone's like, oh, make yourself at home, blah blah. But apart from a bunch of admins just cut and pasting messages, like, no one really cares about that anymore. And if I go there, I'm gonna feel it's so weird. You go to a ballroom party, but you're the only one that showed up. I hope this video has been able to give you some insights to help you invest better in DeFi and crypto in general, and to make better decisions of when to go in and get out of projects. So for me, there is no such thing as a rule of which project is good, because it's always ever changing. And sometimes there are projects that could be like EOR. EOR is like end of road, but make a second life, make a third life. Why? Because they changed something. Maybe the team got refreshed. Maybe there's like new things on the utility. There's new things on the roadmap. And sometimes, it could be a case where in the beginning people came in for the APR and then they left because the APR dropped. And then they only realized later that Every other project out there is crap and they come back because this is the only one where people care to keep it going. Privacy Swap is one of those projects, and no wonder that they made such a strong comeback in the last couple of days. I have a link for that in the video description for you to check it out. Remember this is probably like the most important graphic of this whole video, because it's going to help you to decide like when to get out. Personal advices that I can give you is that when you go into a project, set a target for yourself. Do you want to triple your money? Do you want to double your money? Do you want to quadruple your money? Once you do that, it's a good time to take out most of your capital, all right? And one of the things that I learned as well is that in this early phase, when you're early in a project and the APR is high, you're getting these kind of returns. Highly recommend that you just withdraw. Don't even compound. When do you want to compound? You want to compound, it's going to be in this phase. Before the price, when the price is stable or still increasing slightly, it makes sense to compound. When the price stops increasing, is a time that you should stop compounding and just basically wait and see. So from that point on, look at your returns. If you're still making a positive return and the market cap is good, then great. Even if you withdraw on a daily basis, it's not going to affect the market too much. You're not going to start like a bear market. But if the market cap is small and the holders are few, then yes, that could actually be dangerous and it's probably better just to get out. Remember, the market is psychologically driven. Everything is psychology. I wouldn't be surprised right now as I'm making this video, BTC is rallying again because El Salvador probably managed to fix all the glitches in the Bitcoin system and now things are flying. I hope this video serves you well, and once again, if you enjoy this content, share this video, like it, drop me some comments down below on what you like best about it. This is the PP Dad, and be sure to subscribe for more great videos just like this.